This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the MAYFAIR Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby PECK Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to a new week. It is Monday, and we are in the morning call. Last Friday, listen, a lot went on. Lots of unknowns out there. You know, you get a disappointing jobs number. The market could definitely have imploded. The sellers had their chance to push us below that 1900 in the S&P, and within the first hour, the markets basically took it all back and exploded to the upside. So the question is, was that the successful retest of the August 24th lows? You know, I've been running a big feasibility study, and I've been going into my think tank, and I think what we came up with is that there is a 70% chance that the lows of 2015 are in. But let's not worry about that. Let's worry about what to do this week, how to navigate the action. And we usually look overseas, which has green arrows basically taking our lead. If you look at the HEDJ, which is the ETF for Europe, which we track for Germany, you know, we were watching over the course of the last few weeks, would this double bottom hold, or would we get a double bottom and a successful retest? And it did. Then Friday, you had a big engulfing day, and now today we're up. So, you know, question is, does it get back to the upper end of the range? At this point, you have a point of reference right in here, another one a little bit higher. This is your resistance range. We are getting a little bit of a tailwind out of Europe this morning. As far as Asia, some of Asia is still closed. The Shanghai was definitely a focus. You know, first part of the year, it had a really nice trend above the 8 and 21-day moving average, and then it broke hard. You know, and then every time it made lower lows like it did here with this huge bear flag, our volatility picked up. But now at this lower level, which we've been talking about, the 2800, which held, which didn't even get a retest, and now you have this lower wedge kind of resolving to the upside. So with that being said, between Asia and Europe, we are getting some, you know, tailwind for our markets versus a headwind, and this has, you know, a bit more room. You know, I think this opens up on Wednesday, and we'll see if the markets follow the ETF that tracks it. So again, back to Friday. You know, we talked about 1900, 1995-ish. You know, can the market stay below that? And and it definitely could not. You know, you look at the S&P, you look at this lower range that we've been navigating. Okay, we're getting a little frozen again. Maybe we go to the spiders. We'll go with that. Okay. On Twitter, just so you follow, if you do follow me and you know what my pivot stands for, I said, can the sellers keep us below 189.44 to 189.50? If they did so, they could have had some control. What they do, it went as low as 189.12 and then lost that probably within the first 30 minutes. I know I was trying to be short in here, and I got squeezed and I covered, and I was a little bearish myself on all that news, but then I'm like, ooh, wow, we're not going down. You know, maybe that means that, you know, this low here got its successful retest on this other red dog reversal right here. So there are some guys that are long, you know, this pivot here of 187.64, put a stop in on 186.93, and if you did so, you know what, for a swing trade, because you don't trade every single day, you're up about 6-7 points. Okay, and all you had is about $1 worth of risk, and that's how you play this pivot for a swing trade. And if you trade actively and professionally, maybe you've been trying to do a long side buy it since. And anyway, so pivot number one, and then if you did not cover at 189.50, you could have covered right here. Okay, once it cleared this this level, which was what, 190. This was like 192-ish. Okay, so it cleared this 192. Okay, 50, and then that was your spot. If you got stubborn and you shorted more here and shorted more there and took it out short, you now have to figure out what to do next. So the question is, if you go like this, if you take out that that August 24th lows and draw a pretty big line here. Okay, then remember this side of the channel. Okay, you could draw your channel this way. You had the day that the Fed did not come in and raise rates. That gave you your outside reversal. That gave you a pretty big move from 202 and change down to the lows. So now here we are, out of the lower end of the range, because a lot of people would have said here is the mid end. So here is your lower end. Okay, now the question is, what happens into the higher end? So there is a gap. There's a gap that starts at 197.50-ish. If we were to see this spot today and maybe push through and fell, maybe you do a little bit of a cute short, considering where we came from into this spot. And then if it gets into there and keeps going, it gets filled up to about 192 and change. So this would be the resistance of the day, and here's your open gap, and then here's the upper end of the range. If we do open up, green and go red and trade below Friday's high, and Friday's high was 195.03, I would say for the week, okay, this 192.50 is big. In order to show commitment to, this move, I would think that this 192.50 holds. So, those are my basic thoughts on the spiders in the S&P. Do you chase this up open? Little hard considering where we came from Friday morning, but do you blindly short it also? That could be a little painful if you start early, and if you rolled it up on Friday because of every bearish economic guy out there. I'm telling you, it was tough for me too. I like to separate the economic news from the price action. It was hard to get away from being short, but everyone on Twitter who thinks that we still have to see 15% lower, and maybe they're talking and not trading if they're rolling up their shorts, don't follow them if they don't trade real money. Could be a little bit more difficult for you. As far as sectors, a lot of sectors did the same exact thing. And we've been talking about the bios as a leading indicator. 2 Fridays ago, when the spiders were at 195, I remember because I was on a plane to Atlanta to do a great seminar. Thanks for coming if you were there. The bios led the market lower, and that's when the market failed. On this Friday, which was a few days ago, it was the first to go green. So you always have to look for a little bit of a change of character. And I'm not saying, the bios are out of the woods, but for my Redler All Access, if you remember, after this double test of this 285, on this day, I'm like, what, if you want to buy 295 with a stop at 290, because you don't trade every single day, I do think we see a move back to this, 320 area or 315, 320 for a swing. Okay, and if he did that, then I would take it off. Congratulations. That was a thought in the private Twitter. I think I might have even had it on the other one. But anyway, here was your pivotal move. It went green first, traded above it. It's probably opening up into this zone. What I would do is I would trim some. Okay, before you just have short on the brain, it could see a little bit higher. It could see closer to 326. Last time you had your short setup was when it broke right here, and that was all the way up at 350. So here was your retest. Here was your lower pivot break above. Now you're getting some follow through. This is a zone that you probably want to trim if you're long, and maybe even get a little bit of a cute short verse. Not even a cute short, just even if you get a topping tail here, you get a short verse. This movie just came from because it's far from out of the woods. But anyway, this helped lead things higher. As far as the Qs, it also, look at this chart. This never, ever even came close to testing the August 24th lows. Either did the Dow. So, you take this end of it and you get that out of the way, and here was your double test higher. And then this also held the 3-day pivot, which is why I list 3-day pivots, and then got through, pretty big resistance, which was right here. So now the next question is, how does it act around the 200-day? So we shall see. Just like what we've been trying to do with trading the ranges, you want to be careful chasing an up move. So at this point, if you were long and you held it over the weekend, you're getting paid, trim some and hold some. And if this market's going to be any good, you would think now you could draw this line going sideways. This 102.70 probably holds. So if you peak here, come in here, there's your continuation. Last tradable move was, again, when the Fed didn't raise rates, all of a sudden, pow, that was your topping tail. Gave you a swing short, and now all of a sudden, we're coming back up. Maybe we make a lower high, maybe we don't, but all I know is that there's been some decent trades along the way. I'll also talk about the banks. The banks were the weakest, which makes sense because no rate hike for 2015. They make a whole lot less money. They were the last to go green on Friday. You take a quick look at the XLF, and you know, this too is kind of hanging by a thread. It did hold the support, you know, big support, and it did give you a red dog reversal around this pivot here. So if you were using the 2212 pivot, you know, you made some decent money, or you could have used this higher pivot here. It closed well, and now you'll see, you know, does it take back the 21-day and work its way back to the upper end or not? So today, to see if the opening strength holds, maybe see if the banks stay green, or if they go from green to red, that could you know, give you some clues that maybe there's a little bit of weakness to set in. If you look at Goldman real quick, you know, this too is just in no man's land. You know, the trend here broke so long ago, and it's been just in a void or a trade. You had your first ascending channel that broke. Here was your lower high with that outside day right there. And now the question is, you know, will this be the bottom? This is one of the few names, big names, that undercut the August 24th lows. So, you know, it has a lot to prove. It's got some room up to, you know, maybe 180 if it wants to continue to rally, and then the upper end of the range is all the way up there. So see how, you know, Goldman acts for the banks, but they could be sluggish moving forward, not maybe the place you want to be. I'll give you a look at one other name. JP Morgan has been better than Goldman. It also gave you that reversal on, you know, on Friday, but below all the moving averages, still so noisy. This would be resistance 1 right here, and then here is your resistance 2. So there's that. As far as, let's see, you know, key names, a lot of names have been so broken, so battered and bruised. You know, we've been trying to take two-day type trades. So if you happen to do it this time where you got long on Friday or covered and did nothing, okay, that's good too. But, you know, into this up move makes it hard to kind of chase it. But there's been some bases being built. So if we do get a sustained move, you know, later this month, because earnings aren't for another 2 weeks, and, you know, then all of a sudden the buybacks start happening again once earnings season's over. So if they, you know, can't break the double bottom lows, and they can't break these names without the buybacks, and they get earnings out of the way, and that happens, you know, seasonality-wise, we could get some more action. So one name that's been a little weaker lately, you know, is Apple. Apple has been like almost dragged up by the market versus leading it up the last few sessions. So it's still hovering on this pivot. You got a small red dog reversal on Thursday, held above that on Friday, but there's still a boatload of resistance in front. I think it's up 50 cents. See if this goes from, you know, green to red. If it happens to do so, you know, maybe it puts a little bit of pressure on tech. The 111 is the pivot here, but if it were to open up and go negative, then you have to watch for this spot. A break below this spot would not be good. I think, you know, what we've been talking around the VTF is so many people have the 6. You know, I got the 6. You know, not many people have the 5S. So if you're going to be buying a new phone, you probably would be getting the 6S if you have the 5S, not from the 6 to the 6S. It's not that much of a dramatic difference. So I'm thinking that, you know, sales aren't going to be tremendous. But anyway, it's also kind of cute. I said this before that, you know, Uncle Carl came out last week alongside every other analyst bringing down their expectations for the market. So his thought was we could get hit hard, but Apple won't suffer. And I think since that Wednesday interview, you know, the markets have rallied back considerably, and Apple's been a laggard. But anyway, just, you know, pointing that out. So Apple, kind of a bit of a laggard. We'll watch it, you know, but I wouldn't be overly focused on it. I think I was a little too overly focused on it, and I saw the weakness in it on Thursday and Friday, and that gave me a little bit of, you know, bearish on the brain, which, you know, money went elsewhere. You look at other tech names, Google, a little bit better. Very hard to handle. If you got it on Friday, congratulations. You know, this overall pattern still has a descending channel right here. It did clear this pivot for a trade, so now you want to see how it responds here. Every time it's got up here, it's kind of failed. So I would just see what happens there. So I wouldn't be chasing it here. But if you're in it from the hole and it's up today, maybe you sell some and then see maybe you catch a cute short if it goes from, you know, green to red. But overall, this is setting up pretty decently for earnings. Amazon, the same. Amazon reclaimed all moving averages. Not the easiest stock to trade, because if you're wrong in the first initiation, you're probably down a decent amount of money. But this also cleared, you know, your pivot, and now I guess you got to draw the resistance going across this way. So there is some room up to here, but you know, again, I wouldn't chase it after move sub 500 into, you know, be buying here at 540. But it doesn't mean you blindly short it either. Because look at the last time it had a pre-earnings move. It just went through resistance and didn't look back. I don't think that, or I'm not sure if that's the case right here, but I would be careful. This is, if any name could do it, it's Amazon, and it's also probably Google, and I also think Netflix is, I've been actually active, pretty active here. It looks pretty good, where you do have this resistance going sideways. If this starts to clear this pivot here of 107.50 and then reclaims that 50-day, which is right in front of it, it too can make a move back up to bigger resistance, which comes in here and then all the way up here. And if you were to draw, this kind of wedge type or descending channel, it's almost on the right side of it, which means some shorts are starting to get squeezed. So this is something that I think looks more constructive than other names out there. Tesla got hit pretty hard and then had a big engulfing day on Friday, so some people might have switched gears and got long on this red dog reversal right around this pivot. If that was you, great, you're getting paid a little bit. Now, in order for this to really get traction, it's got to reclaim all these moving averages, which comes into about 254. So, this will be a big test to see if this can regain some strength. If you remember this outside day right there, that was your clue to get out of Dodge. So if you did so, you had the opportunity on Friday to test it as a changed character. And now we'll see what happens at middle ground. Another stock that kind of looks decent is FIT. FIT's been hanging around, a new issue and some new blood in the market. I do see a lot of people wearing them, and it's acting somewhat well. Did not get back to the August 24th lows. Has a bit of a wedge type pattern here. So I would say if this gets above 39-ish with some force, some momentum could come back here too. And then here could be your support to trade against. So that's okay. Even MBLY, got everything thrown at it from what's it called, Citron to this to that. All in all, we said watch this, this bottoming area if you were long it, and you still had it in the drawer. Well, if you kept it there, you you have a nice tough stomach. Well, anyway, it did clear this spot right here, pretty engulfing type move, and your next resistance is right around there. Overall, long term, it still has a lot to prove, but it's in one of the hottest sectors out there where there's growth. This was your descending channel with the red dog reversal. That was your entry area. Then you had this false breakout, which if you sold, that's probably when last time I really traded it, you had the opportunity to buy into this bigger support, and now resistance 1, and then here's a very bigger resistance right around there. So as far as social names, Facebook still best in breed. Did get, it's been a trade. Here, I'm looking at the longer term chart since I have it up. Overall, you go across this way and pretty much held its prior breakout. But not a lot of stocks have done that. It's above most of the moving averages. You take a closer look here, and you had a big engulfing day on Friday. Here was at bottom. Here it actually held the triple support, and I guess you draw a line like this. It's got some room back up to this end of it before earnings. Earnings aren't for another week or two, so just figure out the movement here. After a move from the lows into here, do you go out and chase it? It's not the easiest thing to do, but being short here could hurt. Okay, I'll give you an instance. Okay, like I told you, the bios have been battered and bruised. Sometimes you get this V-type move that could blow the doors off you if you're short. Look at this INCY. INCY broke hard before. Right here, it was trading really well. You had this whole upper support, and then it broke the 8-day right there, which could have got you out. And then you had this bigger break right here, and you were probably fully out. I'm like, okay, I'm out of the way. And then, came all the way down. This is horrendous. Look how it just engulfed this entire area. So you would think that on a bounce back, you could just reshort here, right? You could probably reshort somewhere around 112, 114, right? Here is your bottom. If you're going to play a bounce, you would think you could play a bounce to here or maybe short there. Look at that move right back up to highs. So if you reshorted into the moving averages just because they were right there, and just because this was prior support that could have turned into resistance, you could be in for trouble. And now you're right back at the highs here. So I'm just saying, some of these type of individual stocks could do that, and the last thing you want to do is just be fighting it. While I'm on bios, let's talk about a few more. CELG was one of the few that actually, it led off a little bit less dangerous to trade, led off the lows, and just like I showed you, a resistance here is probably a resistance to sell. Doesn't mean you have to short it there. Here is your bigger trend line, so this is where this potentially can get to before it gets some bigger resistance. What VRTX do in this bounce? It also bouncing back. So here, which was support, probably turns into resistance. So if this is up today, maybe you sell a little bit. Decent move. I think VRX got a bad write-up in Barron's. hasn't reacted the same. So so hopefully, if you're in it from Friday, see how it reacts. It did hold this 165 zone. But so I'm just saying with the bios, they're fast and furious, and a lot of the little ones are the same. Sometimes you don't think they can go lower and they get absolutely annihilated. Same way on the bounce back, you think that you could just short, an area of confluence and you can get run over. Oil, I think, was kind of impressive that it's held around. They've been throwing everything, and including the kitchen sink at oil, with Goldman saying it's going to go to 20, with, the inventories are up. This was your first 3-day move that put it back on the map. Here is that 1420 that I keep writing about in my note that held. At some point, it might resolve to the upside. Right now, it's still, the jury's out, but the XLE is not really waiting. The XLE had a really potent move on Friday. Still in no man's land, but it did hold above this, the double bottom August 24th lows and reclaimed the 21-day for the first time in a while. So if that, is real, you could see a move at least up to here and retest this moving average. So big day there. Trend has still been a heck of a lot lower. Look at the XLE. So just if you're looking to just re-short a bounce in a broken sector, just know, look where this came from. Look at that head and shoulders top here with the left shoulder, the head, the right shoulder. Here's when you could have gotten out of the way when it broke the 200-day, which we talk about. That means real institutional selling. So all the way down here, if you're just trying to retest or short the first bounce, just know that sometimes they become bigger bounces. And this would be like resistance 1, and this would be a much bigger spot that, if you catch a move like this off the lows, you can make yourself a heck of a lot of money. I was actually, talking to a few of my friends that trade debt, and they were talking about a lot of the little ones, and they're like, at this point, they've been so battered and bruised, you could catch a 20-30% move in what I usually call my treasures for trash trade. Like one of them, this little company, EMES, this stock has been absolutely annihilated from 140, 130, last year to even earlier this year, 80 and even, 90. And then you fast forward to here, we're pretty good sometimes at finding these little type of bounce plays, which are, let me get it here, which, are not the most safe to play. But anyway, I think a lot of insiders started buying somewhere in the 15s. So he was like, Scott, this thing's sub 7. If it just takes a move back and squeezes back to here, that's 30%. 30%, you guys could time these type of names, and it's, not the easiest things to do, but he's like, in the spring, this was 40. So you're not playing it back to 40, you're looking for these things to maybe go from 6, 7 to 11 or 15, and that could be a big move. That's not really what I like to do, but there are names like this all across the board in the oil service sector and, in coal and in a lot of these things. I think it's something we also look at sometimes at like CHK, Chesapeake. This too has been so battered and so bruised, but, at some point, I don't know when it is, one of these trends get taken out and they get a squeeze, and then all of a sudden, if you're trading a level versus level, you could catch a move from, the 7s, even if it just went back to $10. That's that's a decent percentage move, and you're not looking for a huge move, which could even get to there. But I'm just saying in general that you want to have stops. You want to be out of these things once they break the 200-day or break the 21-day or break all these things. So this way you could find a name that used to be a decent name, and when they decide to squeeze these things, that's a different type of trade. At this point, I got a little ahead of myself there, just it was on top of my mind. It's hard enough to find leaders that are strong enough to hold for more than a few days, but if we did hit a market bottom, there'll be all different types of trade between now and year end. Don't just revenge, don't just think short, don't be all upset you missed what people said was the biggest reversal in 4 years, because I'm just as upset. That's my setup, but I was bearish and I was negative and I didn't think that it could happen. So instead of losing my shirt, being short and still being short from Friday, just get out of the way. And I don't have longs overnight, so I'm going to be like, okay, maybe I make a little cute money fading into resistance, but I'd rather see if I could buy a dip, accumulate 4, 5, 6, swing longs if we are going to get a move, a little bit through earnings season. So just, have a flexible, clear mind, and don't be upset if you missed something last week. Last week was just last week, and we have a whole new one in front of us. I will see you on the virtual trade floor. I'll see you at the recap, and let's get off on the right foot. Have a great start to the week.